In this session, I will discuss how to measure the performance of Islamic banks. Several so-called scientific studies have been published on evaluating the performance of Islamic banks. These studies include the research done by experts in institutions like World Bank, IMF, Asian Development Bank, African Development Bank, Islamic Development Bank. With some minor observations and qualifications, all these studies, decorated with sophisticated regression models and complicated econometric analysis, generally prove that Islamic banks on the whole are performing well. These studies, in fact, give wrong message about how Islamic banks are doing. It was explained in earlier session that Islamic banks model, their business model, is exactly similar to that of conventional banks. The comparison of performance of Islamic banks and conventional banks using conventional evaluation models thus becomes an exercise in futility. There is need to measure and index the performance of Islamic banks in a way that would substantially distinguish them from conventional banks. Performance of Islamic banks therefore needs to be measured in at least two directions. One, fulfilling the expectations attached to the concept of Islamic banking they claim to do. Two, penetrating in the market to effectively reach their potential clients who want to do their banking business on Islamic basis only. Let us take the first point. What are the expectations attached to Islamic banks? Based on public opinion surveys and Islamic scholars' views, I can enumerate some of the expectations. Number one expectation is, of course, that business of Islamic banks conforms to Sharia. Sharia scholars certify that they do, but this certification is not a certificate of their performance in this respect. The performance indicator on this account would be to show how much Islamic banks succeeded in attracting the clients who were looking forward to do business on Islamic basis only. Second, that Islamic banks contribute to wider circulation of wealth is another expectation. This expectation is directly derived from the economic objectives of Sharia, and Islamic banks are expected to show their performance in this direction. In line with the Islamic spirit, Islamic banks are also expected to show that their priorities on asset side reflect Islamic spirit and that their priorities are significantly different from the priorities of conventional banks on this basis. The Islamic banks will show their care for the lesser privileged members of the society as one of the key expectations. The conventional banks and their infamous performance for wealthier clients deprives the less privileged members of society from getting access to banks' resources. Islamic banks' performance in this respect is therefore widely sought by public in Muslim societies. There is general impression that Islamic banks will offer participatory capital to encourage potential entrepreneurs. Entrepreneurial resources are scarce in every economy in general and in contemporary Muslim economies in particular. Lack of startup capital is the biggest hurdle in the development of this resource in the economy. The concept of mudaraba and musharaka are excellent tools to meet startup capital needs of emerging entrepreneurs. Islamic banks are expected to show how much they are interested in promoting this feature of Islamic finance. Conventional banks make huge profits by using their customers' deposits in creating further money. Islamic banks imbued with Islamic spirit are expected not to usurp all these unearned profits but use part of it to help their less privileged customers and clients or to support social causes in the society. These are some of the expectations. It is understandable that there are serious institutional constraints in moving in these directions. But in the spirit of transparency, it is desirable for Islamic banks to show what they are doing for moving in these directions. It is quite possible that the Islamic banks may already be performing in these directions to a substantial extent. They only have to realize this and dig their own statistics to prove their spirit to meet the expectations attached to them. The second element of their performance as Islamic banks relates to their dominance in the market. Islamic banks are reported to have assets of around $2 trillion, indicating a less than 20% share in the commercial banking market of OIC countries. These statistics do not tell us enough about the performance of Islamic banks. This has been achieved over a period of 40 years. Close to 90% of these assets are concentrated in 6 countries only, where 2% of whole Muslim world Muslim population lives. What is important is how far Islamic banks were able to reach the clients who looked forward to do banking business on Islamic basis only. Market penetration rather than market share is the relevant indicator when measuring the performance of Islamic banks. During last 5-year period, an estimated of 60 Islamic banks were added to the Islamic banking network in Muslim world. Compared to this, 380 other commercial banks were added in the banking industry in the same Muslim world. Conventional banks are reaching Muslim population more than the Islamic banks are. No data is available how branch network of Islamic banks is expanding in comparison with the branch network of conventional banks. Probably poorly. Market penetration of Islamic banks will make more sense if Islamic banks show that financial inclusion has increased because of their Islamic banking. The performance of Islamic banks thus needs to be expressed in terms of A. Expansion of Islamic banks' branch network in comparison with that of competing conventional banks. B. The number of customers Islamic banks have been able to mobilize who were otherwise away from the banking system because of religious considerations. C. The number of customers who switched their accounts from the conventional banks to Islamic banks on religious grounds. The point is that Islamic banks need to construct various indices to address and show that their their performance is unique as Islamic banks so that they justify their existence and generate their demand as Islamic bank, not as another bank. I therefore propose that Islamic banks need to consider making such indices available as Perception Index, Financial Inclusion Index, Customer Client Conversion Index, Network Expansion Index, Circulation of Wealth Index, Sectoral Priority Index, Social Finance Index, Participatory Finance Index, Profit Sharing Index, and etc. Based on such indices, Islamic banks may also give a composite index by aggregating these indices to show how much they are different from conventional banks on the whole. A similar exercise needs to be done for Islamic banking at national level, and this may be done by central banks of countries where substantial Islamic banking exists.